only thing that's on my mind is who's gonna run this town tonight.
We are, yeah, I say that we are. This is Rock Nation. Pledge your allegiance.
This town.
All right. How's everyone doing tonight? I see a lot of current clients in here. I see a lot of new clients we've been talking to. A lot to talk about, folks. Really excited about tonight. Everything going on here with what's going on with institutional investors and Trump's executive order and ban. So we've got very, very excited you are here to join me tonight and go through some of that. For those of you new to our company is Sidera Wealth. It's an acronym for strategically diversified in real estate assets. So we are not offering self-directed IRAs. However, that's where the acronym comes from because so many of our clients use a self-directed IRA to diversify and not just be in the stock market and be able to own real assets with their retirement account. So I'm Josh Gilmore. I'm the Senior Vice President, real estate investor as well. I've been blessed to be doing this personally for over 13 years, and our company is celebrating 25 years in business this year, helping clients achieve financial freedom, being able to invest this way myself, for my family, for my friends, for my future in retirement. And I'm so excited to share this great news coming out with Trump's ban on institutional investors and why it's going to be so good for us as real estate investors. So first and foremost, I'm sure you've seen all of the headlines and how houses are bad and good with Wall Street being involved in buying houses in certain markets, institutional investors investing in real estate and owning homes and outbidding a single mom who can't buy a home because BlackRock's buying that home. Well, number one, first and foremost, the executive order is titled Stop Wall Street from Competing with the Main Street Home Buyers. Because ultimately, when Wall Street is showing up to these open houses in growing markets like and including Texas, which we're going to hit on because that's where the majority of the institutional investing is going on right now, you're not in a housing market anymore when they show up with unlimited capital. You're in a capital market. So this executive order is directing all federal agencies to stop approving, insuring, guaranteeing, securitizing, and facilitating the acquisition of certain single-family homes by large institutional investors. And in addition to that, to promote sales to individual investors, first-time home buyers especially, and we're included in that as individual investors. We're not institutions. So as individual investors, we're going to get some advantages here. And the directive defines large institutional investor and single family home, not yet. So the deadline for defining that is actually in 2 weeks on February 19th. And the deadline for publishing these guidelines is March 21st. So now, between the next now and about 45 days from now, direction is clear. The details have not been finalized. And that why this is going to help us win is the institutional buyers are all winning very fast. They come in aggressive, bulk bids, few or no contingencies, and a high chance of closing. If their ability to buy is constrained, especially around federally connected pathways and mortgage-backed or government-backed mortgages, the bid pressure eases. Even a small reduction in this marginal bidding is going to change who wins the housing market and who wins a house. And nationally, big institutions are a small slice of rental homes, estimated to be at 450,000, about 3% of the single-family rental market, but they're highly concentrated in certain markets. And does anyone in the chat want to take a guess to see which market is number one? That's right. It's Texas. Everything's bigger in Texas, and that's where the majority of the concentration of institutional buyers are. So a lot of people think this is a national average story. It's not. It's a zip code by zip code story. And being brand new homes, that means builders like us can offer more closing cost credits, rate buy downs, upgrade packages, lots of items that will go away as homes get more expensive. And the fear with this, which is understandable, is that it's going to lower home prices because there's less buyers in the market. But the reality is there's not less buyers in the market. There's more advantages for first-time home buyers, which ultimately, as real estate investors and individual owners, this is going to benefit us in multiple different ways. Number two, being better controlled locally and more of a community. So imagine a neighborhood where you have 100 homes and 50 are owned by an institution, a faceless corporation. How much do you think they're going to care about upkeep, taking care of the tenants, providing a great house? Or are their priorities going to be more aligned with, I want to make a huge profit here as an institution investing in real estate properties? I want to make a massive profit over anything else. And yeah, hold on, let me adjust this real quick. And we are talking about it in a way where it is going to benefit us because these neighborhoods are going to get better and better and better. And the executive order is a spotlight and scrutiny on what these big corporations are doing to destroy communities, to come in and not take care of people and treat it as, evil corporations do. So ultimately, our communities that we're investing in, they're going to get better. There's going to become more homeowners, which is going to increase the value of the homes. The homes are going to be run by people like us who care about our tenants and want to create a great house. And ultimately, that is going to increase the home values, especially in Texas, where we have 1/3 of the homes just in the greater Houston area of institutional investors, let alone the rest of the state, and the state being the #1 state where institutional investors are buying new homes. So as many investors know, cash flow is made at purchase. And even a small improvement in price and terms, like the rate buy downs available today before these programs go into place, that will go away as things get more expensive and first-time home buyers become our competition, which is what we want. We want first-time home buyers. We want our neighborhoods to be in the areas that are growing where they transition to more owners over time, which is ultimately more value. So the elevated inventory price cuts are already improving leverage. Less institutional pressure in these certain submarkets where these institutional investors are focusing, like Texas, will mean more accepted offers, better concessions, and overall a better investment experience for us as investors because our neighborhoods are going to get nicer and nicer and nicer. So if more homes are available to individuals, you preserve that bigger owner-occupied buyer pool in the neighborhood. Owner-occupants support stronger comps, and ultimately a much higher sale price for your home. So this EO is about restricting the federal facilitation and federal asset disposition and increasing the enforcement and the scrutiny. It's not an instant cheap houses tomorrow. The win is the direction of policy, the friction and challenges for big buyers, and ultimately better negotiating leverage for us, individual investors. So in Texas, we're stacking tailwinds. Negotiating conditions are improving, and the biggest competing checkbooks are being challenged in the exact markets that we targeted. So going into it, we really don't have a better time than now, folks, because once this changes, it's going to completely change the landscape, especially in the Texas market, where we have so many institutional investors buying up these homes and outbidding the single moms. So I'm sure everyone saw what happened today, and anyone who's has crypto and wasn't waiting for the dip is feeling it today. And that lack of protection is really why investing with us makes so much sense in uncertain times like we're in today. because you're not dealing with the stock market. You're not dealing with the crypto market. You're dealing with a tangible asset in a growing market where there's so much upside potential, not only for increased rents, but increased home value as well. And this is where the US retirement system is going to fail most retirees. The vast majority of retirees, over 55%, are projected to have to go back to work because their retirement is not remotely keeping up with the inflation we're experiencing today. And if you look at this chart here, I'm sure we've all felt it going to the grocery store, how much more that costs. Your electric bill, your healthcare, which is extremely important once you get into retirement. You have to plan for your healthcare. But more than anything, in the last 7 years, housing has increased by over 64%. That's massive. So imagine if you owned houses pre-pandemic, how much equity you would have, how much higher your rents would be and are. In some cases, for those of us on here who have been with us for 7, 8+ years, you know exactly what I'm talking about, and seeing our rents go from $1,500 to $2,000. And that is way higher than inflation because real tangible assets like houses go up over time. And that outpaces the average income of 4%, which won't help you retire. That's going to be beaten up by this inflation alone. So enough doom and gloom. Let's set a goal worth building towards. What is your why? Why do you want to do this? For me, I want to have enough money to travel in retirement, never be a burden on my family, and leave a great legacy wealth. And what is that freedom number? What does that look like to you? So for the typical client in our now 25 years of experience, it's 5 paid off homes. That's $10,000 a month. That's over $2 million in equity. That's enough to be the supplemental income. Some people may need less. Some people may need more. That's where it's really important to meet with our team, go through the cheat sheet, and find out what it is your family needs to be successful on that. And we have a freebie on the webinar tonight, folks. Actually, we're going to be giving out this book for free to anyone in the audience. So I'm going to drop in a link right now to the chat, and you can download our book for free, The Freedom 5 Formula. It's all the steps taken. You can buy it on Amazon if you want a hard copy. It's available 5 stars. It is one of the items we're really proud of because it's all about how to structure this, how to have a real estate portfolio that can outlive you. And simply put, without getting into all the details, very simple 3-phase strategy. Acquire enough properties where you'll have them paid off at retirement. 5 properties paid off in 20 years is a typical timeline, but everyone's different. Some people are retiring in 5. Some people are retiring in 30. Some people need 10 homes. Some people need 20. So step 1 is acquire those homes. Step 2 is leverage those homes. Use the bank's money to increase your returns. And the final step, the fun step, is having enough cash flow so you don't have to worry about working. You don't have to worry about running out of money. So doing it yourself, book is a great place to start. You can identify 5 properties in growth markets. You can secure your own financing. You can go inspect the homes. You can file your cost segregation studies. You can track your investments. You can do all of it yourself. Only caveat is if you're inside of an IRA, you do have to be careful because if you do a prohibited transaction like manage a property yourself, that is not allowed. But outside of an IRA, you can absolutely manage it yourself if you so desire. Last thing in the world I ever want to do again is manage a property, but some people love it. What our company does and why I invested here and why I continue to invest here is we have a full service, soup to nuts approach to real estate investing, where we do everything from finding the markets to building the homes to having management options and ongoing customer service support to make sure you're successful as a long-term investor with this. And as a company, we're rebels. We challenge the status quo. We don't believe Fidelity, Charles Schwab, Merrill Lynch should be your only option in retirement. We work with partners like Clayton because they believe in our mission and they are passionate about helping people achieve that financial freedom. We're experienced professional investors. We have over 25 years of experience in business. We've invested through the 08-09 recession successfully. We know what we're doing when it comes to finding the right markets, and we love to share that knowledge with our clients so they can be empowered. And if you can't tell by my voice, we're very, very passionate about what we do here. We're called to serve. We employ the same investment strategies with our own families. And we're proud to partner with Tim Tebow and his foundation. We donate enough to save a life for every single property that is purchased through us. And ultimately, when you're working with us, being more of a full service experience, breaking that down for you, because that's typically the first question people wonder, well, what does full service mean? You know, is it turnkey? Do I buy the house, I can turn the key and I can move in and that's it? It's a lot more than that. So first and foremost, we research for 2+ years the best growth markets. We use over 30 key indicators. One of those is where the institutional investors are going, and find the best markets today with the biggest upside potential, the lowest risk. Go to those markets. We build exclusively off-market deals, brand new construction, built for investors, designed for investors today with high retail value down the road, especially with what's going on in today's climate, because now there's going to be a lot more home buyers in Texas. And we have a lending team, so you don't have to use our lenders, but that's one of the pieces of service is we get big discounts on loan products, interest rates, and buy downs. So working with our lenders, you get discounts you wouldn't normally get if you did this on your own. And we vet and establish and work with the top local management teams and have ongoing support post-closing from the time you acquire to the time you sell. So that 10+ year history, looking at the market for 2+ years, only investing in markets with low vacancy, high job growth, stable employers like college and healthcare. And going into those markets, we're building brand new homes designed to be very low maintenance with all durable, long-lasting materials, warranties, very minimal risk, includes easier to rent homes overall because they're new. You're taking a bonus depreciation if you're able to take advantage of that outside of an IRA with this, because they're new homes. And that's one of the things that is included at no cost to our clients is the cost segregation study. And overall, our lending team, we have now over 300 preferred lenders. So our lending team will shop for you instead of you having to call 10 different loan companies. That's where the real acceleration and power of this investment lies. So for example, think back 10 years. Imagine if you had $200,000 and you bought one house. Now, let's take that same $200,000. Let's put 20% down. Let's buy 5 of these homes. Say they make no cash flow. Not retiring for 10 years, could care less. How much wealthier am I going to be in 10 years? How much appreciation am I going to realize over that time? I know. And even at measly 3% per home, that's $6,000. So you invest the same amount of money and make $30,000 per year. Imagine 10%. It gets bigger and bigger. And in addition to accelerating your growth, you're also increasing your protection from inflation. If you invest that $200,000, 20% down, you now own $1 million worth of real estate. Compare that to owning $200,000 worth of precious metals. Inflation's 10%, your $1 million of real estate now just increased by $100,000. Your average monthly rents of $8,000 a month for the homes now increased to $8,800 without your mortgage changing, by the way, because that's locked in. Versus if you have $200,000 in precious metals, you only made $20,000. You're paying storage for it unless it's in your house in a safe, and it's not paying you rent every month. So I'm not saying it's a bad investment. It's an excellent hedge against inflation. But real estate, obviously, for this and now the bonus depreciation coming back, is well outperforming your gold, silver in multiple different streams of revenue. So the tax savings can be massive as well, too. For high income earners, this can be one of the main reasons to do real estate is that future wealth and immediate tax savings. And similar to how you get 5x appreciation, you get 5x depreciation when you're doing these homes. So yeah, one home, typical $350,000 investment home as a short-term rental. If you're at the highest income tax bracket at 37%, and you utilize this strategy with one of our enrolled agents or CPA teams we work with that give tax advice to our clients and specialize in real estate. So that's another reason to book a call with our team, and we'll have a quick video about that as well. We can put 20% down, 70,000. So as an investor, I would buy this home. I'd invest $70,000. I'd be able to write off $80,000 from my income, which at the highest tax bracket, 37%, that's saving me $29,000, $29,600. That's like getting 42% back just from tax savings. And even if I'm at a lower tax bracket, if I'm at 25%, I still save $21,000. And that's like getting a quarter back, 24% back in your first year of doing this, just from taking advantage of the tax laws that benefit us as individual investors. And last but not least, property management. One of the most crucial parts of your success is having a good property manager. And anyone have a horror story of a bad property manager? If you've done real estate long enough, you've worked with one or two, that's not great. And one of the benefits of working with our team is we're going to support you and have multiple options for management and ongoing support. We research, vet, and test out managers. So we interview 20 plus managers in every market we go to. And we give you a list of the top 3 to 5 and a guide. And you interview them and you decide who you like best. After the sale, our customer service team is doing quarterly calls to make sure everything's going well and help you if it's not. So the idea here is to be a successful investor remotely and have a commission-based team working for you. And we've been successful with this now for decades. So the key is communication as an investor. Communicate, keep in touch with our team, keep in touch with your manager, and you're going to be successful. So this is great for anyone who's a busy professional looking for passive income. First-time investors ready to start, needing a team to help them. High-income earners that need to reduce their tax liabilities. Real estate investors ready to scale and optimize and increase their portfolio. And really anyone wanting to retire comfortably with a secure financial future. So I want to share a quick video of some of our clients who've achieved financial freedom and are well on their way to achieving it and what that means to them.
The Freedom 5 formula, the freedom for success, what it means to me. It means I have freedom to do anything I want to do. I'm not limited down to taxes. I can do different layering of different things. I have rental properties now, which I never had before. Within 1 year, everything became possible. So I just want to thank the whole team for working with me, especially Josh, for making this happen. Thank you.
I like this model where you're starting with a new property, not one where you go in and refurbish. They brought a turnkey product to us. You know, you can really be hands-off. You know, once everything gets set up, you can step back and just let everything work. So that was one of the main selling points. Financial freedom really means to do whatever you want, when you want. You know, not having to depend on an employer, you know, really just depend on yourself for those freedoms.
I will say this, Josh, it's a satisfying journey. It's exciting, and it's, you know, you guys always ask, you know, what would you recommend or what kind of advice would you give clients? I will say, if you do start on this journey, it is addicting, especially when you get things set up and you have good property management in place. You continue to look forward to closing on the next deal. You know, and my goal and going back to our initial conversations, you know, you always start out by asking, what's your why? You know, what are your goals? My goal was
been investing in real estate for the past 6 years now, and I've been attracted to real estate just because I think it's a far superior asset, you know, with all the benefits of tax benefits, depreciation, cost segregation, you name it. It just has so many more benefits than any other asset I've been able to find. In the process of buying my second property with Sadira Wealth, and they've made the process very easy. I'm an out-of-state investor, and they've streamlined everything. The financing, property management, picking out the properties, they've thought of everything. And for somebody like myself who's out of state, it really makes the process very easy. So my recommendation would be to trust them, trust the process, and you know, have a happy retirement, which is what I plan to do.
All right. Well, Jim, Sarah, Kevin, Taylor, already booked calls. Looking forward to having you talk with our team. That's excellent. That's excellent. Great to see you. Great to see so many people engaging. And we're gonna keep a seller credit that was actually going to go away for anyone on this webinar. So if you book a call with our team, no obligations to purchase. However, in addition to getting all the other discounts and credits like cost segregation, you're going to get an extra 2% seller credit if you're able to book your call with our team tonight. So excited for that as well. And getting back to our presentation here, those are the typical clients we're able to help from all walks of life, and the formula behind it: cash flow outpaces inflation, grows over time, is all about paying these properties down and having these renters pay your mortgage off just like you paid yours off. Getting that accelerated growth and appreciation, and the fourth stream of revenue being tax savings, getting to legally keep more of your own money in your bank account. So super excited about all of that. You get custom strategies with us, exclusive investment access, 0 fees, education completely free. We only take on clients that are a good fit, and we have a limited amount of spots left for this year. So excited to share all of this with you, but we want to make sure it's a good fit for you. We're not going to take you on if we don't think so. So looking forward to those first calls and interviews, and you can take advantage when you're a client of our bulk purchasing power. We're able to get discounts on the land, labor, building materials. So not only do we charge no fees, we're able to get you a better deal than the average market price for a home. And we're going to keep that ongoing education and market. And we have all the resources here, from new client welcome packets and guides to teach you about vacancies, how to minimize those, how to shift from short-term to long-term, how property taxes work, and a few other factors and things to consider to just be a successful owner, to be aware of everything that can and will happen with an investment, and to be prepared to make those decisions where we can support you through it, but nothing is going to be a surprise to you. So ultimately, I want you to imagine what that could look like for you. Your properties are appreciating, you have growing equity, your cash flow is increasing with some properties being paid off completely. You have a low tax bill. Strategic planning has helped you live your ideal life with the time for the people you're passionate about and love. And you're building not just an income, but a legacy. So everyone asks, when's the best time to start? And especially with the institutional investors, you should have bought yesterday. But unless we get that DeLorean up to 88 miles an hour or higher, you're not going to be able to go back in time. So the second best time is today. And in addition to being able to invest and buy a property, which is typically $50,000 to get your first investment property, we've also partnered with Connect Invest, which is a way to invest in our properties as a lender. So it's a very secure investment backed by real estate. The interest rates are 4 to 5 times the average savings account. And the best part is you can start with as little as $500. So if you've been fearful of real estate for any reason, or you just want to get to know us because this is the first time you've heard of us, you can start with $500. And it's not a fee, you're making an investment. And tonight we're going to give one special out as well. Anyone who signs up for a Connect Invest account tonight, they will get $50 when they fund their first account. So I want to play a quick review of that as well. And you can hear from some clients who've started in Connect Invest and have gotten to the point where they own properties, or some stay in Connect Invest, depends on their goals. But we have overwhelming A+ feedback, A-rated on Better Business Bureau, and excited for y'all to check that out as a way to save up between properties, also to get your feet wet without having to invest $50,000 to get started.
Hi, my name is Deb, and I've been using Connect Invest for 1.5 years.
Hey, this is Nick. I wanted to give you a quick reference on Connect Invest.
I wanted to try Connect Invest because I was just looking for other ways to allow my money to work for me.
Started investing with Connect Invest in 2023.
I started out with a small amount to make sure that this was right for our family.
I have been investing for about 1.5 years now. And I started out small, wanted to make sure it was a legit setup.
And I've decided that it is. It has helped our family financially. I highly recommend using Connect Invest.
In each short note, you're basically investing within a diverse range of projects.
Connect Invest gives me a way to hedge my savings against inflation with little to no effort on my part.
I wasn't really happy with the interest rates that most savings accounts and bank accounts were offering, and I was just looking for something a little bit more. I wanted to see more traction through my money, and Connect Invest has allowed me to do that.
I went small and I started to see my interest go into my wallet every month. I even took some of that interest and transferred it back to my checking account. It was smooth as can be.
I've enjoyed investing with them. They have a really great customer service. I enjoy the diversification of my portfolio.
What I love most about the Connect Invest program is how simple and easy it is to understand, especially coming from someone without an investment background. This is a great program to get started through real estate investing.
Simple, and put it back in, and every month I get interest into it. And once it hits $500, I start a new short note, and so it's compounding nicely. At this point, I've got a few notes.
What I would say to someone who wanted to try Connect Invest is just give it a shot. I love this program. Try the 6-month note. It's not very long. You'll understand how the program works, and you'll see your money grow in ways that I haven't seen before.
It's a great way to make a little bit of extra income on the side.
My experience these past 4 years being a Connect Invest client has been extremely positive. In these past 4 years, I've opened multiple notes. I've allowed them to mature and grow.
With different term dates, and I'm very pleased with it. Very simple to manage it, very simple to see the money go in, and extremely happy. If you're looking into it, I would recommend it highly.
And you'll see your money grow in ways that you hadn't seen before.
All right. We're getting close to the Q&A portion. So I see a couple questions already dropped into the chat here. That's totally fine. And there's a Q&A as well. So I'll look forward to getting to that as we kind of wrap up here tonight. And I want to share as well as ongoing free education that we offer. We have an exclusive member site. You can sign up for free, access this webinar and every other one that we're doing here. And I'm not sharing it, so I'm going to share it real quick. Exclusive member site here. This is the QR code. Y'all can scan that with your phones. I'm going to jump into the Q&A right here as well, too. Right. So how do I do this with my Fidelity IRA? That is a great question. Fidelity does not allow you to do this because Fidelity and any other custodian out there falls under the ERISA Act of 1974, which set forth a very small list of things you can't invest in with an IRA and gives custodians like Fidelity, Charles Schwab, Merrill Lynch the right to offer as many or few investments as they want to. So as you can imagine, the Fidelities want to keep your money in the stock market where they make a ton of money on your fees by charging you fees. So we do work with multiple self-directed custodians that actually allow you to own real estate. And we can help you set up that account if it makes sense to work together. So we got, how would I share this with my friends and family? I'm more than welcome to share that booking link with your friends and family. They'll be able to book directly with our team. That's through Redacted. We do free consultations for all of these clients. Do we own a percentage of the properties or individual ownership? Individual ownership. So with Connect Invest, you're investing as a lender. So your investment's backed by the real property. With owning the property, which is the main program, you're buying individual deeded homes, single family homes, just like the institutional investors are getting banned from. That's the type of home you can own as an individual investor. So you have a lot of curb appeal for resale. You control when you sell it, how long you hold it, who manages it, if you do short-term, long-term, mid-term. And we're just here to make you successful. So you want to keep investing with us. And that's where over 85% of our business is done. Can I use a 1031 exchange? Matt, you want to jump on the mic and answer that one?
Yes. We actually do a ton of 1031 exchanges as a company, and we've helped a ton of clients. Here, I'll hop on camera here too. We've helped a ton of clients successfully complete those. So it's a big part of it because we are able to actually control the inventory. There's a lot less risk of the deal falling through because of an inspection issue or because of, the seller that's backing out because of, they decided to keep the home that they wanted to live in, whatever it might be. So we're able to get that set up very successfully to you. We work with qualified intermediaries that we can help set that up to make sure the tax side stays productive. But yes, that's absolutely something we can help with.
Very cool. Very cool. So Gus, interview, your booking link right here. I'm going to send it again to everyone. You can book a free interview with our team here. And you'll be locked in for that discount as well too. And I'll grab the next one. It can be used with VA benefits. Typically, you want to check with your VA provider. It almost always is a primary residence. So like a duplex type property, if you lived in one side and rented the other side, it's possible. And we do have VA clients who buy our properties. Typically, people are coming to us not to buy a primary because we're not designing custom homes for you to live in. They're meant to be great investment properties that have low risk, strong building materials, and good curb appeal for the future appreciation of the home. But it is possible, Darren, and we're happy to explore every opportunity with you. Feel free to grab a time on our calendar and figure that out. I'm seeing some more Connect Invest, so I want to shout out Jim, Sarah, Kyle B, C, and Kyle K. That's very cool. 3 Kyles in a row. Best man in my wedding was Kyle, so his name that rings a bell. So absolutely, I can talk about the 50K investment. D, yes, it would be a positive cash flow investment. And any property we do, we're not going to be able to do it with financing if it can't qualify for a DSCR loan, meaning it would cash flow positive enough where the bank is willing to put the loan on the property based on the income it makes. So we're going to markets where we're going and building $200,000 to $300,000 homes that rent for $17,000 to $2,000 to $2,600 for the more expensive ones. So there's lots of room for cash flow. And even with $50,000 down, you would be positive cash flow, especially more so in the last month. Rates have only come down and are expected to continue to come down. And UDFI, Lucas, that is a great question. I have to disclaimer, I'm not a tax professional, but you can talk to any tax professional in this space, and UDFI is a good thing because when you use leverage and you pay UDFI, it's because you made 5 to 6 times what you would have made without leverage, and the tax is usually 15%. So it's like, don't use leverage if you don't want to pay that tax, but I'd rather pay that tax and make way more money and be able to pay that tax and keep way more of the profit. And one loophole, Lucas, that I use personally is a solo 401k, because UBIT and UDFI, the taxes that can come only with leverage on an investment property in an IRA, it doesn't apply to anything outside of an IRA, doesn't apply to a 401k. It's one of those funny government things where they create a rule for retirement accounts, IRAs only, but not 401ks. So if you have a self-directed 401k, which is possible, it doesn't apply. D, management companies typically charge 10 to 12%. That's the industry standard. One of the benefits to working with one of our preferred managers is we're able to get a discount, and our managers are typically between 5 to 8%, depending on the area and the manager. And the more volume of homes you have, the more of a discount you would get. So some of our managers that charge 8%, which is still better than 12, will do 5% if you have 5 or more houses. And Darren, for the maintenance, we're responsible as owners, but we're not the ones getting the phone calls. So like, for example, I have repairs that happen on my properties that are 6-7 years old because that's after the warranty ends on the majority of items. And the major items with a brand new home, like air conditioning, HVAC, they're 10-year manufacturer warranties. So those break, manager gets a phone call from a tenant, manager calls the warranty team, doesn't cost you anything. Now, let's say you hold the home for 12 years. In the 12th year, the air conditioner goes out, the condenser is busted. It's going to cost $1,500 to replace it. Manager's going to call you and say, hey, tenant complained, we sent a repairman out, it's going to cost this much. What do you want to do? And you can say, let's replace the whole unit. You can say, let's just do it cheap. Let's get a used part. You make that final decision, but you don't have to do the work of it. You don't have to schedule, arrange the maintenance. That's what the managers get paid for. So when we do projections, we plan for vacancy and we plan for maintenance. We build it into the equation. But being a brand new home with a warranty, it's typically not something you're experiencing much of in the first 5 years, and really nothing major for the first 10 years. And many clients typically hold for 5 to 10 years before they exchange and buy new properties in the new market and take advantage of the equity they've built. So you can really minimize the risk with new homes versus like if you bought an old home that the numbers look really attractive on paper, but then your air conditioner goes out and you're out 2 years of cash flow. So you got to be careful with that. And you can definitely double up on using a third-party warranty beyond the home warranty if you'd like to. That a lot of investors do that. I roll the dice with it, but I also don't have many homes that are older than 10 years. I've typically sold them. The only ones are ones that I got low rates in 2020, 21 when I refied. And those are worth keeping forever because the rates being 3.5%, which I don't think we'll ever get that low again, but they're definitely coming down, and that's only going to drive home prices up and make it more affordable for home buyers, especially in Texas with institutional investors leaving. So really excited about what's to come with that. I think I got time for one more. Let's see here. Do most of your clients get approved for financing? And where can I hear more from your clients? Well, I'll wrap up with a video, a testimonial video, and I'll send you all a link to some of our testimonials. We have tons and tons on Instagram, Facebook, tons of client visits, that type of things. Because you can come out and see the homes before you purchase them as well. So I guess I'm answering like 4 questions at this point. But yeah, there's some videos, there's tons and tons of warranties here. But ultimately, with financing, we have multiple different types of financing. So the most difficult to get financing is conventional, which is based on your debt to income and your credit score. So you have to have good debt to income, good credit score. The middle ground is DSCR, debt service coverage ratio. So D, that's where we know all of our homes cash flow well because the banks approve them based on the income they make. So DSCR, you can show 0 income, you can be fully retired. You could be like me and have enough tax write-offs to legally show 0 income. And you still get financing. It's just slightly higher rates, usually half a point, still cash flows. Non-recourse is available to anyone. It's 100% asset-based. It's the only financing allowed in an IRA. And if you have a 500 FICO score, you can still get non-recourse because it's not based on you, it's based on the property. And that also should give you a ton of peace of mind buying a property from us, knowing that a bank is willing to put in more money than you, not based off your credit, but based off of the property being a good investment that is more likely than not to pay off the loan by a huge margin. So thanks, y'all. So good to see y'all here and very engaging audience. I'm going to wrap up with one more video with some client reviews as requested, and look forward to seeing y'all on the next one, and hope to see y'all take advantage of these discounts while they're available.
Realizing that there were some great options to be able to invest in other really solid markets that can provide a good return on the investment. And I think that was really eye-opening to me.
Option of acquiring newly built properties was definitely quite appealing, as opposed to properties that require rehabilitation and things along those lines.
All those kind of assumptions and projections from the beginning that Cedira provided were really very accurate. And I tried to see if I could, get anything cheaper in any particular area. And really, I mean, I think Cedira does have the huge advantage of a full service real estate company, and with working with a number of customers and clients that they can kind of take advantage of scale that Cedira is working at. And that really does provide some savings to the clients and customers of Cedira. So that's kind of a huge benefit of working with Cedira, and one thing that I was really pleased with.
I've got some rental income coming in on a monthly basis that hopefully by the time I do want to retire, I can have that as a form of income.
Really great caveats or great pieces of information that I've taken out of this, and that I'm working into my overall financial plan. And
it's a company that's been pretty good to deal with. They've got rental properties across the country.
This isn't get rich quick scheme. This isn't like buying a $2 stock and crossing your fingers and hoping, in 6 months, you can cash it in for millions. This is more of a slow, more conservative game, and the sooner they get in is better.
The strength of these markets outside of our home market of being in California, and I think that's pretty eye-opening too, is to talk about the great market analysis which I got from I received from Cedira.
In terms of kind of explaining the multiple streams of income or value or revenue from real estate, so kind of learning those 4 kind of critical areas where you can have cash flow, tax benefits, but then also you're gaining equity in the house, and then the house is the property will appreciate in value over time.